Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones here, and it's a daily chart. I don't have the last night's bar in here, but it didn't move that far. But I just wanted to talk about the sort of bigger picture here a little bit. We've been talking about this as a wave 4 correction here, and we're sticking to that story. And except that wave 4s can get rather complicated, so we need to include all the possibilities here. And what I find sort of interesting about this particular correction here is that we had the same correction in 2008 at the same price, 11,500, and also the same time as well through August and September. And I'm just going to have a look at that again because it's a really good model for what could occur through here as well in terms of the corrective pattern. At this stage here, we've got this pattern here as a 3-wave structure to this point here, and that's fine. But we also have a 3-wave structure down through here as well now. So this has also got the makings of a triangle pattern, and a triangle pattern is 5 of these waves like this, all in 3 waves each. That's what a triangle is. I don't think that we're going to have well, I guess you can call it a triangle as such, but 1, 2, 3, 4, and 5 as like this here, all in 3 waves each, and all diminishing to some particular, like a triangle does. It sort of diminishes into that 61.8 line through the center of it, so to speak. So this is a real possibility, and we need to sort of include this in the scenario. But I think what we'll get is that if we come back over to the correction that occurred at the same place and the same time just a few years ago, here you'll see that it's very much the same type of correction, and in the same sort of place as well. So far what we've actually got is we've got this 3-wave structure up here, just like I mentioned then. It's important just to trace this out, and then we've got that 3-wave structure down here like we've got there. And then we're looking at this section through here. You can see that one of the points I wanted to make is that each move that comes down, we've got very high retracement levels. So that's something that we need to look at. And even once we come through here, we've got this as well. So, our particular correction is slightly lower under the 11,900, 11,500 level here, which is a medium level. So we're sort of slightly down a bit in the whole pattern, but I think that we need to really sort of take a close look at this particular pattern, and yeah, so. This is what I think that we could, to get going down here, into the next leg. It's never that sort of easy because we've got these high retracement levels each time here, and I think that's what we're going through here, and it's what we need to look at a bit more closely over here. But I think one of the good points over here is that even though that we will be going through this pathway here, is that we'll be staying under the 11.5 this time. So but we can come back up. We can come back up to this point, so that is a concern because we've got short trades in the market. But it is correct. This is a correction because of this 3-wave structure here. It's just how we're going to fold out from here. Are we going to have those 5 waves down as what we've been sort of looking at through here? And that's still possible. We're working with that, and that's our number 1 choice. But we also have to include this triangle pattern through here, which leaves us in the situation of looking at this particular move coming up through here, because when we look at this here, what we were looking at in this terms is we were looking from this point here down through to here. We were looking for that being in 5 waves, which we've been looking at, and then we would be looking at a counter trend coming back up. Now, that counter trend coming back up, the norm for that, and this is where we are now, is the 61.8 retracement level. So if we put that there, that 61.8 retracement level there for the Dow comes in at 11,200, so to speak. So we're at 11,100 now. So we've got to have a look at that, but also got to point out that this is not, the 61.8 thing is not set in stone, and it's not set in stone here. And I say that because there's no real sort of volume to supply really at that level there to pin it there. The supply and the real resistance where the volume is sitting is up at 11,272 to 11,300, and that's what we're going to be looking at. So the S&P 500 is already at its 61.8 retracement level, and yeah, so we're sort of close, but there just may be a little bit more in it to come. And this is what we're looking at here with the Dow Jones. This is a 4-hour chart here, and those little 5 waves that I've just mentioned are coming down through here. And you can see here the 11,200 here is the 61.8 retracement level. But at this stage here, we can consider it. It could fail here, it could fail here, but as I mentioned before, the 11,272 to 11,300 is where the volume starts here. Yes, we do have a trend line, but they're a bit of a hit and miss thing. They can be spot on or sort of way out, but that's where the supply is here. So that's where we would be sort of seriously sort of looking at. But it also can fail just here. So I don't know. That's the point here. So 11,100, 11,200, 11,300. All these are viable options within here, and we need to consider that. We need to consider them seriously. But as mentioned, the 11,500, we won't see the market come back up over this point here. So, and it's the same for the S&P 500 as well. The S&P 500, this is the 30-minute chart here, and the same trend line coming through the top here. It's the same with most indices as well. We've got this structure coming down through here for a little wave 1, and we're looking at an A and a B and a C wave, and that's coming into the 61.8 retracement level at that point there. So we can take that point there down to that point there, and it comes in at the 1170 odd here, but in this here at this subgroup 2, as we call it, 65, 72 and the 80. But the supply once again doesn't really start until the 180 here. But that, this rally could be complete here. That could be done and dusted. Now, if that is the case there, then we should have support in the US dollar at that point there as well. And that's something that we'll look at a little bit sort of later on. But we don't have any evidence of the actual turn at this stage here. So that's a problem. If the 11,100 on the Dow Jones finds support, then we naturally have to look at 11,200 because the Dow moves in 100 lots on each move most of the time. So that's what we have to look at. So if support came in here at the 1172 here, nice solid support, then we have to look higher. We have to look into this bunch here for that. But as you can see here, this move up through here, this first move here, this is a corrective move to the upside here in terms of an A and a B and a C here. And it's that because this point here overlaps the top of this structure here. So once again, we do have a corrective structure here. It's just how far is it going to go? And this is exactly the same picture for the SPY as well. So we can look at that. Okay, this is a UK market, sorry, the FTSE. It's the same with the FTSE as well, the A, the B and the C. That could certainly be the top in there. And normally what we find too is that with the A wave here, this distance here is normally the same distance for the C wave as well. So, we can call a top in here, but we don't have any evidence. It would only be evidence if the 51.72 became a strong resistance point here, and it's quite natural for this to flicker around the 5,200 here. So we need to allow that to play out. And from, analysis is one point of view and trading is another. So allow this time to dance around both sides of the 5,200. And after it's done about 3 swings, then look for support or resistance and trade long or short from that point. But as you can see up here at the 5.3 and the 5.272 here, that's where the supply starts and that's where the real resistance is. I don't know if we're going to get that high or not. I just don't know. One of the things is that we're seeing, if I can just bring up the DAX for a moment here, on the 5,000 level here, if you're familiar with the trading levels, you'll know that we can expect a bounce here. And this is why we've seen this technical thing in here after the DAX had hit here, and we're seeing that go through Europe in the covering the French banks because they've had a strong fall there. But it's just technical, and it will run out of steam. But the bounce there is important, and it's it's like a ball bouncing on the ground. The second bounce will be lower, and third lower, and so forth until it just bounces on through here and drops through. So a bit like this actually. See how that's come down and hit the 5.5 there. 1's the strongest number in the market, followed by 5, so you got 5,500. So you got the first bounce, second bounce, and then it drops through the support there, and then you have the retest of the support as resistance, and that's your shorting point there. So the breakout is important, but the retest is more important. A failed retest is where you're short, and that's happened on the on our local market as well. So when we're looking at the SPY, we can see that this is the 4,000 here. This is what we call the medium level, and we're seeing the bounce off here, and we're still seeing the bounce continue, but we're also seeing it in terms of the same pattern. This is a 30-minute chart, a bit squashed up, but basically the 3-wave structure here for the A wave, 3-wave structure for the B wave, and then the C wave moving up through here. So the 4.1 here is going to be the important point here. If that became support, then we would look to go up further. But also understand that it is the group 1 above the 4,100 that's important. So the 10, the 20, and the 30. If the 30 becomes support, then what it does, it separates itself psychologically from the 4,100 and then is free to move above there. So while this market is may trade up through here, but just be aware that it's group 1's job to hold the price to the 4,100. So the top of group 1 of 4,130 and the group 2 here, the 65, 72 and the 80 here, it's its job to offer support. So if we take a closer look at that in here, this is this situation here on a 30-minute chart. It just opened up a little bit. So we've got the nice clear ABC there. So we know that it's corrective. And this is the B wave, always in 3 waves. So we're looking for 5 waves coming up here. A little bit dodgy to count, actually. The 1's fine, the 2's fine. There's a little bit of trouble in here with overlapping structures. So it's not clear at this point here, so I can't really pinpoint it for you. But we could look at this here, that distance there, having the same distance here. So we can expect it to fail here. There's a little gap here that we're looking to get covered, and that be covered. There is a little gap further up as well, coming back further up, which I need to sort of point out, which is I can't remember if it was here or up here. There's one point somewhere stuck there. There's a gap in here that never got covered. So that's an important thing to watch out for later in the piece. But look, anyway, through here, the 72 here, as long as that's support, then you need to be on that side of the market, but you've got plenty of resistance at the 4.1 there. It's going to be very tricky to trade through here. There's not going to be very much range in here, and you're likely to get stopped out. So I'd kind of leave it really until there was a move up through here, a move 3 swings across here, nice support sitting on here, and then moving up from that point and finding support on the 41.10 to start with there. So just be careful around here. We're not expecting it to range out in any way. In fact, the US had a very small range in its trading there. This is just BHP in the US, just good to keep a bit of an eye on it. And we can see that, yes, the market is up here. It's a daily chart. And we sort of expect that. We're expecting a retest of the 80. It probably won't get there. It'll probably go from 61.8 from that low to that high there, somewhere in amongst there. It'll have a crack at, and it may do it, but the point being is this is corrective as well. And we're looking for possibly a triangle in here as well, in an A and a B and a C and a D and an E, and then drop from there. That's certainly possible. We'll see how we go, but we're on the negative side of the market here, and this would be the this is sort of our market in the US there, and we'll see that when we have a look at the copper chart in a minute. Now the gold market here, I've got this labelled still as a possible C wave down through here. But on our Elliott charts, we've got this whole pattern up here as a triangle. So have a look at that there. The supports for this, though, if we just go through here on the degrees of support, obviously 1800 is the support here. Now, if group 1 here, subgroup 1 finds support, the 1830 there, if it finds support, then you can move in long, but realize that the 1850 and the subgroup 2 here are going to offer strong resistance there. There'll also be a trend line through there as well. There is a lot of resistance through here, but this is where you'd build the trade from the 1830 there as a really solid support there, and the stop would probably go under well, you can put it under the 1800 here, but you could probably get it under the 1807. But if the support is found on the 1830 there and it does start to move up, then you can bring the stop up to 1827 and 1817 first, and then 27, but expect a reaction at the 50 there. Yes, but there's still half a silly chance that it can move down as well, but there is good support from here. But if it moves through the 18 here and then found it as resistance there, then we can look at some short trades from that point there, with the expectation of it breaking this trend line through here and eventually finding the 1772 as resistance through here, and we'll be looking to add to any shorts to that point there and getting down to the 1700 and the 1650 here to cover this gap over here. But as it stands, that 1830 is going to be very critical, and you can also sort of draw the line that in subgroup 1 here, the 1820 is the sort of pivot between these two here. So if the 1820 became resistance, or the price traded under that, then that would be cause for weakness at that point there. So the 1820 is really important, to work with there, but you can allow it to come down to the 1817 there at that point there, but below that it's in danger zone there. Copper. Okay, so we're looking for wave 1 coming down, which is fine, and we're looking for wave 2 to go back up, and that's fine. Now, this may just be, in terms of wave 2 here, this could just be the A wave in terms of an A and a B wave to here or to here, and a C wave moving back up here. This 405 here is the 61.8 retracement level at this point here, so it can come to there. However, that can be enough for it just there as well. This particular structure here doesn't look that corrective in nature, so it can just be the A wave. So we need to prepare for that. I guess if the 395 became a retested resistance, then we could look to short at that point there. So you would need to see the price move down through here, then come back up and get stuck there, just like it's doing here. Yeah, getting stuck there. So if it gets stuck under there, then you can get one short position there, looking to add under the 390 there, but expect to bounce off that as well. we are expecting it to take this low out here and to pick up speed through down here, and this brings us, it brings us to the Australian dollar, and it also brings us to the SPY and our ASX market, but it also brings us to Asia as well. Shanghai have got their own futures copper market these days, and a lot of volume is being traded through there. So any sort of weakness here is really going to put pressure on the Shanghai market, the comp. So if we have a quick look at that while we're here, you can see that that's actually it's actually weaker than most of the other markets. So that's good for us because we've got short positions in there, of course. And you see it's trading sort of much lower here, and that move Tuesday taking out that low there just really helps the situation of being further weakness developing. And in terms of the trading levels here, we've also got a medium level here on the 2,500, so halfway between 2,000 and 3,000, and that's why that's there. But as you can see, it's penetrating through here. It's trading under that now. It will try and could rally back here today and have a bit of a crack at the supply here, but it's sort of doomed now. So it's it can still flicker across here, but it should take out these lows here, and these August lows here is what we're considering taking out on the Dow Jones, on our local market as well. But the Shanghai, I'm just pointing out, is leading this, and this is a duplication of the copper market as well. So the base metals, we just use the copper market for a guide stick, but sort of weakness there. So we're seeing weakness in China, and we're part of that story as well, obviously, and but we're also a dog on a lead to the US situation as well. Yeah, not a lot of strength in the market. I just see a bit of strength, technical strength coming in on the DAX as a buying point there on the 5,000. Right, and the oil is following stock, and it's continually to push higher, but we figure that there's going to be a top in here shortly between 90 and 91 in here. We don't see much. It just follows stock at the moment, and that's what it's doing. And yeah, so it'll sort of fail in its own time. When you look at WPL and OSH, they're not really, or the energy sector per se, they're not showing any sort of strength there. So any weakness in this oil market here are really going to send WPL, OSH, AJK, all the energy sector stuff very sharply to the downside. So they would be the ones to look out for, because if they're going down or not going up while this is, making an effort here, then that's a real sign of weakness in the Australian market. So, yeah. Okay, that's it. We've got a lot of short trades out there. Of course, 4 trades, or as many trades as you can remember, all the certain price points, the entry, the stops, and the current price and so forth is enough trades for a person to have. But I've put a lot out there because people have got favourite stocks and like to trade various things, and it's how we manage those trades. And while the markets are showing some strength, and we're not quite sure where the top is at this stage. So if the Dow Jones finds support on 11,100 and the S&P 500 on 1,172 here, if these rallies, all these rallies, be it the UK, be it our market, be it the US market, if these don't roll over from this point here, then we'll tighten the stops up on the short trades that we have, and rework them from there. But as I mentioned, that we wanted to cover. We wanted, on our short trades, we wanted to cover this. We wanted to cover this bounce here in the market, and we know that bounce was going to go from the Tuesday right through till the Thursday. So what we're trying to do is we're trying to hold our short positions to accommodate the bounce and try and get through to next week. If we can do that, then we'll have some nice large profits in there. If not, then we're going to have some small losses in the market there. So that's trading, unfortunately. And but like I mentioned yesterday, you can, on the robo short trades for the daily, you can have tighter stops, and you can take part profit to so you've got a free trade there. So you've got a lot of choices. So whichever way whichever way it falls, there's no need to have any reasonable sized losses. You can have small profits, break even, or very small losses in this game. Yeah, let's just continue to play that game and keep our heads together, and let's just see how this rally pans out through here, to see if this is actually an A and a B and a C here, and that's going to be the end of it, and we'll be going to the downside, because we don't want to clip our positions out until we've really sure of what's sort of happening. And a solid support on this group 2 here, or the 11,100 for the Dow, or the 11,130 would be the real key subtle point for the Dow Jones on the physical market there. So we'll allow that to play out, and we'll make our decisions from that point. But certainly want to keep those short trades there until proven otherwise. Alrighty, well, good morning and good luck.